A few weeks ago, a client shared with me a proposal he had from Rippling, a PEO or professional employer organization, and I wanted to share my thoughts on that company's EPLI coverage. A good place to start is explaining what a PEO is and what it does. Professional employer organizations like Rippling will bundle HR services, payroll benefits, workers' comp, and other coverages and services into an offering and becomes a co-employer of your employees with you, the worksite employer. Hi, I'm Gordon Coyle. Welcome to my channel where we talk about the risk and insurance issues on the minds of business owners. As an expert business insurance broker, these videos are intended to help guide and educate decision makers to help you make more informed insurance buying decisions. If I don't answer the question on your mind that brought you this video, reach out and let's connect. I'd love to hear from you. And if you find this video helpful, do me a favor and hit that like button and subscribe. All right, the critical coverage that I want to talk about in this review is EPLI, or Employment Practice Liability Insurance, which PEOs, professional employer organizations, often bundle into their offering. It certainly makes sense to protect you and them as co-employers from claims that can arise from employees alleging some form of a wrongful employment act, like harassment, discrimination, hostile work environment, wrongful termination, and more. The biggest problem I found with the Rippling EPLI coverage as of this date that my client was offered is that it had a $100,000 retention. Retention is like a deductible, and it's the amount you'll pay out of pocket before insurance proceeds begin. That retention applies not just to settlement amounts, but also to defense costs. If you're a small business and you're hit with an employment claim, do you have an extra $100,000 sitting around to be spent on lawyers or settlements? I didn't think so. Even if you did have that type of cash, you could probably find better uses for it, right? Most EPLI policies for small businesses have retentions of $5,000 or $10,000, and some policies even have a zero retention. Another key element of a good EPLI policy is that it will provide defense costs and wage and hour claims. Now, wage and hour claims are claims made by employees that allege their employer violated labor laws related to minimum wage, overtime, misclassification, etc. It's a growing source of claims, and while insurance cannot pay for the settlement of these types of claims, it can pay for the defense costs associated with them. Most good EPLI policies will provide a sublimit of $250,000 for defense costs, but the Rippling policy did not provide any coverage here. The third area of concern is that the Rippling EPLI policy will not cover claims that arise from people who are not receiving services as covered employees. That means if you had volunteer labor, part-timers, or off-the-book workers, or short-term temp workers, any EPLI claims arising from these workers would not be covered. Is that a big deal? Maybe not as big as a $100,000 retention, but for some employers who do occasionally use gig workers, this could be dangerous. Finally, this is a common concern for all PEOs, and that is the aggregate limit of liability. Rippling's EPLI policy has an aggregate limit of $6 million. The aggregate is the maximum amount that policy they have will pay in any one 12-month policy term. That means all the employers enrolled in the Rippling platform share in this aggregate limit. And my concern here is that multiple large claims could exhaust the policy at some point during the policy year, leaving no protection for all of the other members. Now, I've never heard of a PEO policy exhausting its aggregate limit, but it still concerns me. I want to make sure that my client's insurance is bulletproof. So, what's the solution? Every business owner needs to evaluate the strengths and weaknesses of any PEO's offering. But if you currently have EPLI coverage and you're considering Rippling, then you may want to keep your current coverage in force. Unfortunately, Rippling cannot credit back to you for keeping your own policy, so you'll end up for paying coverage twice, but the goal here is to be protected correctly first and get cost efficiency second. If you're not sure what your PEO provides you and you want a second opinion, that's where we come in. In the description box below, there is a link to my contact page. Fill it in, and I'll call you right away to see how we can help. Look, I get it. Business insurance is confusing and costly, and we're out to fix that one client at a time. We'd love to hear from you, so let's connect. Thanks for watching, and please hit that like and subscribe button for more content like this. Thanks.